Alright, what's up guys? So I kind of want to go over this trade that I took today and why I kind of took it a little bit early. If you were to look on my Patreon, let me pull it up real quick. I had 606.17 marked out, or I wrote out 607, but if you go in my pictures, oh shoot, I didn't even include it. But so this is what it looks like on the hourly. If you look right here specifically, is what I was looking for, and right here and right here. Right, if you've seen my videos before, this is like a break and retest for a reject, and then a break above, touch and go for support. Um, and if you watch this recording, you'll see that I hopped in right here, and it's a little bit sped up. And the reason why I want to say I stayed patient for right here is because I saw this familiar pattern. This pattern, I don't even know what to call it, and it's never always the same, but it provides, um, and I don't know if this is something that has always happened, but I've figured it out in the past couple months that when we see a pattern like this, not specifically this in the circle, but like this, like, okay, we get a rejection, pullback, and flush. I feel like I've said that before, but this is a lot tighter, but it's usually like it just looks like if we get increasing volume here, which is this one, right? Am I tripping? Well, here's a couple ways to look at it that could give you like a good confirmation to hop in. But it's like a bear flag. You get this serious red volume here. If you look down, extremely low green volume, and then this fall off of like a shoulder. And I think a good place for entry would be right here. But technically, what I really want to say is, damn, I wonder if I could, um, what I really want to show is this right here. If you see these, I'm sorry, these bars right here, this decreasing volume right here, right there, right above that 11, that decreasing volume should technically be your confirmation of going short. So the reason why it looked good, and I know I had kept this in my head going into this level, which we didn't fully touch, that I kind of placed it a little high. If you watch any of my videos, you know that I usually place my levels on the bodies of candles, and I was paying attention to seeing how we react, and I think this is a good reason why I marked my levels the way I do. But if we go into today, if I'm trying to reiterate what I'm specifically talking about, let's go into SPY, and I believe I was charted on the hourly, but we'll see. So it was right here, 606.17, right? Now, I'm just getting back to the charts, so realistically, I wanted to chart my line right here at the top of these, right here, bottom of these. So pretty much right here, right? This touch and support, this touch and support. Um, but since how these lined up and these lined up, I was like, I'm gonna go there, but I'm gonna highly consider here in the future. Now, if we go into the charts today, look where I, I'm telling you, I had a feeling, and look how lined up that is. Touch, get below, break, retest, flush. So I was very considerate of what I had charted prior that it probably could have reacted differently than what I had charted. So going into this, and I was just getting back from getting a haircut, um, you see this reaction here, and if you wanted confluence, right, you look at these two volume bars. So strong reaction down, lower volume, pullback, high red volume, could enter on the next push up, stop right here, and then ride to previous support, which would technically be pre-market high, right there. And that was it. That was pretty much it. Trim there, get out. Um, Honestly, you probably could have played this pre-market high as like a bounce level, as like a, some people call it like a trend entry. Get above pre-market high. When we get the retest, touch and go. Honestly, that would have been a better trade. But I think out of the past month, I've only traded one pre-market high, pre-market low bounce or reject. It's not something that's typically in my playbook, but I believe it's going to start going into my playbook. But, so, going back, I probably should have marked somewhere like right here. And that's where I had seen it. Wrote it to support, got out, or trimmed, rest at break even. And that was pretty much it. That was the only trade I took today. As you can see, we didn't meet any of my plan. If you were to look at my Patreon. Do 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 do. Do 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 do. There's SPX. I think we opened somewhere in the middle. I can't believe I didn't put the numbers there. But opened somewhere in the middle there. I didn't touch anything until we met my plan, and that was it. Got a little bit out of that. Even here. I was very, like, normally I would chart this like this. More than likely, yeah, like right here. Got in here, rode it to the downside. But so considerate of the level and recognizing this pattern. I don't even know how to explain it, but this is something I feel like you have to have some experience in to know. Like, you can't just teach this. This is a certain formation, the way it looks. I don't know, just something that just hits like your intuition. And there's like, strategies are good, but man, having experience and realizing how candles move and the patterns that they form can really set you a long way. So like, basically what I'm saying is screen time really helps. Like, strategies will get you so far, but intuition will get you, I wouldn't say farther, but it would get you a little bit more. And yeah, I just wanted to spit that out there as to why I had taken this early. And trying to just kind of reiterate that, like, not to only just trade your plan, but know what to look for when it comes to your plan, to where you're looking for something. Like, know that certain candle patterns, reactions, volume, to different time frames, movement, candle movement, stuff like that. But yeah, that'd be all for now. Catch you in the next one.